As we head into a new week, one thing that continues to stand out is how quickly markets can shift between uncertainty and optimism. Even with ongoing geopolitical headlines and continued debate around interest rates, investors were still willing to lean into risk last week. And that tells us a lot about where sentiment currently stands. Last week, major U.S. indices moved higher once again, with the S&P 500 posting its 8th straight weekly gain, its longest winning streak since late 2023. The Dow Jones Industrial Average also closed Friday at another record high. Much of the momentum continued coming from technology and AI-related companies, while easing concerns around Middle East tensions helped calm markets. Even with the strong market performance, investors are continuing to pay close attention to inflation and interest rate expectations. Last week, Federal Reserve officials reiterated that they want to see more consistent progress on inflation before considering rate cuts. As a result, Treasury yields stayed relatively elevated, reflecting expectations that interest rates may remain higher for longer than markets originally anticipated earlier this year. On the economic front, data continue to paint a mixed but generally stable picture. Consumer sentiment softened in May as higher prices and borrowing costs continued pressuring household budgets, while the housing market remains somewhat constrained by elevated mortgage rates. At the same time, corporate earnings and broader economic activity have continued showing resilience, which has helped support overall market confidence. As we move into this week, investors will be closely watching the latest PCE inflation report, the Federal Reserve's preferred inflation gauge, along with ongoing U.S.-Iran peace negotiations. Developments there could directly impact oil prices, inflation expectations, and overall market sentiment. And as always, periods like this are a reminder that prudent investing isn't about reacting to every headline. It's about staying disciplined, staying diversified, and keeping your financial plan aligned with your long-term goals. If you ever have questions about how current market conditions may affect your personal plan, don't hesitate to reach out.